It's the trader tip of the day, and I'm Chris Vermeulen with today's trader tip. Now, the stock market has been falling for quite some time. SP 500 down about 16% on the year. The VIX has been spiking and rallying up, meaning there's a lot of fear in this market. But what is really interesting, there's two key facts here that played out last week, which is the stock market continued to fall, yet the VIX did not move any higher. People are getting normalized. They're getting comfortable with this level of volatility. They're not panicking as much anymore. And so when the stock market continues to dive and the VIX doesn't go any higher, that's a sign we're getting close to a short-term bottom in this market. Now, another thing that really stood out is watching the ARK-K ETF. And this is just one of the gauges. I watch a lot of different groups of stocks, but we saw record volume move into the ARK-K ETF. This is a aggressive small cap growth stock fund, and big money was piling in, buying them at these deep discounted prices. We're looking at 60, 70% off on the ETF from where it was about a year and a half ago. Individual stocks are down even more than that. So there's bargain hunters stepping into this market. And that is a really good sign. Small and micro cap tend to lead the stock market. So if they start to rally first, the large cap should follow second. The unique play on this that I'm keeping my eye on is actually SVXY. It's an inverse ETF on the VIX, and it's a half times leverage. So the VIX is very volatile. So you got to cut that back a little bit. The nice thing with SVXY is that if the VIX moves 10%, this ETF moves about 5%. It's half of the leverage, making it more palatable to trade. And as fear dissipates, fades back down, the VIX falls as the stock market starts to rally or at least trade sideways here, this ETF will continue to rise as the fear fades away. And so anyways, that's the technical trader tip of the week. I'm Chris Vermeulen, and that's your tip.